Hello and welcome to Business 360. It's the first work day in the month of May 2022. However, let's look at what happened in the business world in the late hours of April 2022. This is Business 360 reaching you from the beautiful hills of Ibiakuran. I am Edidion Martin. We'll begin our business news today with the report that Elon Musk has halted sales of Tesla shares after raising funds for Twitter acquisition. The world's richest man, Elon Musk, has stated that he would stop selling his shares in automaker, the Tesla, as the billionaire raises funds to finance the acquisition of social media firm Twitter between Tuesday and Wednesday. Musk had engaged in a sell-off in the capital market, selling shares worth $4 billion within 2 days. This sent the market capitalization of Tesla down from over $1 trillion to $906.91 billion. On Friday, Musk said on Twitter that he would no longer sell part of his Tesla shares after that Friday. Tesla stock had fallen 9.3% within Monday to Friday when Twitter board announced Musk acquisition offer had been accepted, as holders of the automaker sales, as holders of the automaker sell-off in fear that the billionaire will sell Tesla stocks to fund his acquisition. He has raised $46.5 billion with $21 billion sourced from his holdings, while banks contributed the rest. Now let's look at the U.S. economy, as U.S. economy contracts as Ukraine's war hits trade. The U.S. economy contracted in the first 3 months of the year, partly due to trade disruption from the Ukraine war. Figures from the Commerce Department show that gross domestic products fell at an annualized rate of 1.4%. Slower growth had been executed, but the figures were worse than forecast, marking the first fall since the coronavirus-induced recession in 2020. Though inflation is running at a 4-decade high, households have not yet pulled through or pulled back purchases. Our next report is on South Korea. South Korea's economy. South Korean exports growth hits lowest in 14 months. Exports from South Korea increased by 12.6% year-on-year to $57.69 billion in April 2022, after an 18.2% raise a month earlier and below market forecast of 14.5%. This marks the weakest growth in exports since February 2021, amid escalating geopolitical tensions in Eastern Europe and supply bottlenecks. Sell-off of semiconductors and petrochemical products grew at 15.8% and 6.8% respectively. Meanwhile, sales of oil and steel products jumped 68.8% and 21.1% each. Outbound shipments also surged for both computers at 56.4% and biosectors at 14.2%. Exports to the US and EU increased 26.4% and 7.4% respectively, while those to China, South Korea's biggest trading partner, fell 3.4%, mainly due to the country's lockdown of Shanghai and other major cities over the fast spread of COVID-19. Exports to the Commonwealth of Independent States, the CIS, also declined amid Ukraine war. China manufacturing also shrinks the most in over 2 years. The official MBS manufacturing PMI for China fell to 47.4 in April of 2022 from 49.5 in the previous month and below market forecast of 48%. This was the second straight month of contraction in factory activity and the steepest pace since February 2022, as widespread COVID-19 lockdowns curbed production and disrupted supply chains. Output was at 44.4 against 49.5 in March. New orders 42.6 against 48.8, and new export orders 41.6 against 47.2. All tumbled while buying levels deteriorated at 43.5 against 48.7, and employment contracted at a sharper rate of 47.2 against 48.6. Turning to prices, import costs remained elevated at 64.2 against 66.1 amid a softer increase in output charges at 54.4 against 56.7. Looking ahead, business sentiment weakened further at 53.3 against 55.7. Now let's look at the Nigerian markets. In Nigeria, UK parley to boost £3.2 billion trade relationship. The United Kingdom and Nigeria have held trade and investment talks at the Economic and Development Forum, the EDF, in London to promote trade and boost a partnership worth over €3 billion. At the forum, both countries marked increased support for small and medium-sized enterprises in Nigeria, including the UK Manufacturing Africa programs, which has helped 12 firms in Nigeria secure foreign investments. When these deals conclude, they will generate over over $300 million in foreign direct investments for Nigeria and directly create 5,000 jobs. While disclosing this, the UK Minister for Trade, Penny Mordaunt, said Nigeria is one of UK's long-standing strategic partners in Africa, and she is pleased that the UK is continuing to deepen its investment relationship with one of the most vibrant and innovative economies in the continent. Nigeria's Minister for Industry, Trade and Investment, Niyi Adebayo, said also that Nigerian government is committed to implementing reforms that can attract more foreign direct investment into key industries, boost trade and development, and create employment opportunities for Nigerian youths by leveraging technology. Let's also look at the STVNg acquisition, which has been completed with Honeywell Flower Meals. The Flower Meals of Nigeria PLC has completed the acquisition of a 71.69% stake in Honeywell Flower Meals PLC and a 5.06% stake in Honeywell's Flower Mills held by First Bank of Nigeria Limited after getting necessary approvals from regulators. The acquisition was approved by the Federal Competition and Consumer Protection Commission, the Nigerian Exchange Limited, and the Securities and Exchange Commission of Nigeria. STVNg and Honeywell Group had on November 22nd, 2021, announced the proposed transaction, which will bring together two businesses with shared goals in order to create a more resilient national champion in the Nigerian food industry. Honeywell's Group Managing Director, Mr. Obafemi Otundeko, said the transaction will create a business that further serves Nigerian consumers. As he trusts that Flour Mills Nigeria will build on Honeywell Flour Mills' strong legacy, Honeywell will work closely with them to ensure seamless integration, setting the combined company up for a successful future. We'll go on a break now. When we return, we will look at the stock market, the commodity market, as well as inflation and interest rates around the world. Please stay with us. begin our stock market outlook with the South African stocks, which ended higher last weekend. The Johannesburg Stock Exchange, also known as the FTSE All-Share Index, closed at 1.3% higher at 72,438 on Friday, extending gains for the third session. It was lifted by tech stocks in the wake of strong U.S. corporate earnings reports. Heavyweight giant Naspers, the third highest market capitalization in the index, jumped almost 8%. Also, tech process envy surged 9%. On corporate updates, Impala Premium said third quarter production of its basket of 6 metals fell 8% to 735,000 ounces as it continued to feel the effect of extended safety stoppages, power outage, and supply chain issues in its operational third quarter reports, but confirmed its full-year guidance. Considering April as a whole, the index was down 4.1%, while for the week it added 0.2%. Let's also look at the US markets as Amazon sell-off ends at decimal last month. US markets ended April in a deep funk as investors turned their backs on once favored technology companies amid concerns about the economy. A sell-off in Amazon shares after the firm reported a fall in online sales helped drive the Nasdaq index down more than 4% on Friday. April was the worst month for the tech-heavy index since the 2008 financial crisis, with a 13% fall, but the market's downturn is not limited to tech stocks. The wider S&P 500 logged its largest one-day decline since June 2020. It is down almost 14% since the start of the year. Markets often considered a predictor for future economic health have been jittery as economic threats have mounted. Inflation is raging at a multi-decade high in the US and elsewhere, driven by higher energy prices and the war in Ukraine. Let's also look at the commodity markets. We start with cotton, as cotton hits a near 11-year high. As the close of last week's trade, cotton's future rallied at a near 11-year high of 155 cents a bushel on signs of stronger overseas demand for U.S. cotton and concerns over the supplies from the unfavorable weather. The U.S. Department of Agriculture's weekly export sales report showed net sales of 121,100 running bales of cotton for 2021 and 2022 were up noticeably from the previous week and up 19% from the prior 4-week average. On top of that, there is a speculation that India could impose a temporary ban on cotton exports as recent import duties have not been successful in sourcing sufficient stocks. Earlier in April, India, the world's biggest producer of fiber, announced it will allow duty-free imports on cotton until September 30th as domestic prices jumped to a record high because of a drop in production. Also, let's look at Iran's inflation rate at a 3-month high of 35.6%. The annual inflation rate in Iran increased to 35.6% in April of 2022 from March 18 month low of 34.7% in the previous month, pointing to the highest level since January, mainly driven by faster rises in prices of housing utilities at 28.1% against 27.2%. Food and non-alcoholic beverages at 43.5% against 40.8%, and transport at 35.8% against 34.8%. of March. Also, prices rose more for recreation and culture at 27.5% against 27.3%, communication at 4.4% against 4.0%, and tobacco at 39.5% against 37.2%. Meanwhile, prices continued to rise for furniture and household equipment at 28.9% against 30.5%. Clothing and footwear at 45.2% against 46.3%, and miscellaneous goods and services at 30.6% against 34.8%. On the other hand, health inflation was steady at 30.2%. On a monthly basis, consumer prices were up 3.3% in April, the most in 6 months, accelerating from a 1.3% rise in the prior month. Let's also look at Colombia's interest rates, which has hiked to 6%. The Central Bank of Colombia raised its benchmark interest rate by another 100 basis points to 6% in its April 29th meeting, in line with market expectations. The move marks the sixth rate hike since the gradual tightening of conditions began in September 2021, bringing borrowing costs to the highest level since May 2017. The decision was driven by persistent high price pressures and uncertainty around the international outlook. The annual inflation rate in Colombia accelerated to a 6-year high of 8.5% in March, almost triple 3% target laid out by the central bank. According to reports, inflation is expected to fall during the rest of the year and end around 7% in 2022, but is not expected to return to the target within the next 2 years. Meanwhile, the economy is now seen expanding 5% above an earlier estimate of 4.7%. The board meeting is the last before the presidential election in May, with the leftist candidate who has repeatedly criticized the central bank's tightening stance leading the polls. We'll draw a curtain here on this edition of Business 360. Join us again tomorrow for more information on business globally. I remain Edidion Martin. Thanks for staying with us.